Right, welcome once again. So as I stated earlier in our first episode, I mentioned that a good trading strategy should have the following, and I stated that it should have a way of identifying the direction, and then the second thing is to identify setup. All right, so now we are going to look at setups, and then from setup we'll look at confirmations and entries. All right, so I have to say this, before I got to know of Malaysian SNL, you should know that there were people who were already trading SNL. Okay, people were already trading SNL. Somebody like Maso Sapari, who is the king of supply and demand, right, was trading SNL. All right, Bystra was already trading SNL. That is why you have SNLC2 and SNLC1. Right, SNL simply means support and resistance. Okay, so, and I do not use trend line. It's like the way other SNL traders use, because I'm not good at it. Okay, so I just use the simple trend line or the breakout trend line. So I use only two trend lines. Okay, so over the years I've also learned about certain things that I use as my setup. All right, so today the first setup we are going to look at is the miss. Okay, so I call it miss, and it's a concept. All right, so what is a miss? A miss is a situation where price fails to touch any of the two types of SNL. Okay, support and resistance. We know that there is the A shape, the V shape, which are both referred to as classic SNL. Then we have the open close SNL. Okay, so we have the open close SNL. So these two levels are there, right? So what this means is that you have those SNLs marked, price comes close to the SNL and then fails to touch. So it came close, it failed to touch, it came close, and then it failed to touch. Okay, so why is it important? The miss strengthens or validate the support or resistance, and very effective on a higher time frame. Okay, so when we say strengthens, what does it mean? This, okay, because price failed to touch, this is some kind of manipulation or inducement, right? So many people will start buying, okay, because it's close to the support. Many people buy, and then price will come back, use it as liquidity, touch the SNL now, and then fly. All right, okay, it doesn't mean that those who trade this this candle will not make profit. All right, but basically that is the concept. Price will come back, sweep this into the support and go up, sweep this. Okay, here smart money people will call it liquidity, or how do you call it? Yes, they will call it liquidity. It will sweep the liquidity into the resistance, okay, and then fall. All right, so that's what the misconcept is actually about. So that's going to be the first one we are going to do. All right, so let's look at some examples. All right, so here I have this example. Okay, so you see that price has created this strong resistance. Okay, has created this strong resistance in the form of a shape here. Created this strong resistance in the form of a shape, which is this. So A shape. All right, so now price comes close to the A, right, and fails to touch. So it failed to touch. Once it failed to touch, so remember, I'm not teaching you entry, so please don't come to the comment section and ask about entry. I'm not teaching entry. When you get to the entry, I'll talk about the entry. It is, you just don't enter. First of all, before you even take entries, you need to understand why you are taking the entry. So that's what I'm teaching, areas where you start looking for setup. All right, so in this particular case, price misses it. We miss the level, then it comes again. You see, it used this as liquidity, touch the level, and then it dropped. So this is one. All right, now when it comes to entry, I'll teach you, because here price can go as high as this level. It can come as high as this level. Okay, so how do I enter? All right, but that's not what I'm teaching, so don't ask me. I've seen people asking of entries. All right, and I decided not to reply. Okay, so this is another example. Here we have the open close SNL, this level. All right, open close SNL, price comes close to it, price comes close to it, misses it. Okay, it misses the SNL, and then later it comes to touch it, right? Touches and drop, right? So that is the importance of the miss level. When you have an SNL that price has missed, okay, when you have an important SNL that price has missed. So let me show you something. Let me share some idea here. All right, so here, if I'm supposed to draw in terms of curve, I'm going to have a line chart. I'm going to have something like this. Okay, let me make it thicker. Okay, I'm going to have something like this. Market coming down like this, coming down like this, and coming down like this. So we have a QM. Okay, high, low, higher high, lower low, right? And then opposite you have the SNL. Okay, so these are the things that I'm going to explain clearly, right? But now you just need to understand the SNL. So why this SNL? Okay, that's what I'm explaining. Okay, so now price comes to the SNL, misses it, and then I don't know if there was news, price tap the SNL and drops. Okay, so that's a misconcept. Okay, these things, or I've already explained them. Okay, now let's look at this. Okay, so here, look at it clearly. This number one, there's this SNL. Okay, there's this SNL. So here we are going to have this, okay, which we are going to talk about. So there's this SNL here. Price comes close to the SNL. Look at this. It failed to touch. Then the next day, this is a daily chart, a weekly candle. Okay, so the next week, price opens here, drop into it, and then goes up and come to close down this way. All right, so that is one. That is the misconcept. That is a miss. It misses the level, then price comes, touches the level, and goes up. Okay, even without looking at the PowerPoint, you can see that there are a lot of levels. Okay, so let's continue. Okay, so this one is to make it large so that you see that it missed the level and it touched the level. All right, so now we go on number two. Okay, so number two, this is also a weekly chart, right? Price comes close to the SNL, fails to touch, trace into it, closes below, and then goes down. So number two, you see how the miss was used, miss SNL was used here. Okay, number three. Number three, look at this SNL. Still open close SNL here. Okay, so this was classic SNL, open close SNL, OC. Now price created SNL. You see, when this one dropped, okay, it is a weekly candle. What prevented price from touching this level? Okay, so still some kind of inducement or liquidity. So the next day, the next week, market opens here, goes up. I don't know if it touched this SNL. Let me check first. Okay, to take. Okay, let's see if it touched. Okay, I think it missed. Okay, all right. So next day, next week, price opens here, goes up close to the SNL, misses it, and come and use this one as okay. Okay, so this one I don't have the lower time frame. Perhaps even when the market opened, it came down to this level and went up here to miss. We could do that. All right, so now you see it used this one as liquidity to trade into the SNL number 3. Okay, number 4. Okay, so these are number 4. Same concept. All right, so we have the classic SNL, which is the A shape. Okay, A shape. Price comes back. Right, so you see how price uses SNL. It came close to the SNL, missed. You see, this one was liquidity for this SNL. This one became liquidity for this SNL. Price tap into it, closes here, comes back to tap into it, and then it went up like this. Okay, so that is how the missed concept is used. Let's see if you can see more example. Okay, so that was the last example. All right, that's the last example. So you can go to the chart, mark some of the SNL that have missed, and then you see here, even here at this point, I didn't say this. Okay, so we have this SNL. This one has tapped into it, but this SNL is a miss for this. So you see, price tap into it, goes up. Okay, and I'm pretty sure that even here, if I go to the chart, this miss, price, let me see, price by all means came to touch it and came down. Okay, so let me clear it and go to the chart. Let me see. That's good weekly. Okay, good weekly chart. I'm on the monthly. Weekly should be somewhere around this level. I said it. Okay, I said it. It will touch. It touched. See? Okay, yes. So you see, price came to touch it. It's the same level I was talking about. Okay, price came to touch it because this one was a miss. It is very, very important to understand that it will not create this if it is not going to use it, especially on a lower time frame. Okay, lower time frame. This candle was a miss for this. This candle was a miss for this. Okay, look at how price reacted to it. Price tapped into it, rejected. So you see this sell, right? You go to the daily, you see that there is a sell here. This small sell. Okay, let me go to the daily. Okay, so you see that sell was a result of a miss that was here. Okay, so price came to the SNL, sold. Okay, sold. Okay, so that's it for the miss. Yes, I'll do the second one, which is the equilibrium. All right, thank you.